In today's video, I'm going to discuss how you can go from zero passive income to a lot of passive income. Stay tuned. Hey, how's it going, guys? Juan Pablo here from 100% Finance. So glad you tuned in. So today's video, we're going to discuss how you can go from zero to whatever passive income goal that you need. And some things you need to be mindful of, the top 5 things. And I'm just going to share my personal experience. I get it. Everyone has a different journey. Everyone has a different strategy towards financial freedom. So I'm going to speak on behalf of my journey. All right, my own experience share, all right? And if you find value, please like, share, and subscribe. So speaking of subscribers, I'm looking at my iPad here because I love the comments, right? So people, they have questions, concerns, which they're valid because they want to be able to move forward and invest in multi-unit rentals. Why multi-units? Because it's the fastest way to financial freedom. They want rental property so they get enough passive income that exceeds their paychecks so they can say goodbye to 9 to 5. So let's get into the question about passive income. Question: hey Juan Pablo, how did you go from zero to the amount of passive income that you needed to quit your job, and what were the steps you took? Great question, okay? So I want to answer that by seeing how I can put this into like a simple 5-step process that you can implement. So I'm going to just give you the broad strokes, okay? Starting out, like most people, you either are at zero or negative. How are you at negative? Well, you probably have a negative cash flow situation. You might have bought a property wrong and it's a cash suck, meaning it's sucking cash out of your pocket. Or you may have so much debt, you're in over your eyeballs in debt to the point that you're constantly losing money because you're at a negative cash flow situation with your personal living expenses, meaning you have to use credit cards to be able to survive month to month. That's what I mean by negative cash flow. There are people who are watching the video in that situation, but guess what? It's not the end result for you. There's hope, and hopefully I could be that beacon of hope for you as well through this content. So if you're at negative cash flow or zero cash flow, either way, this will help. Okay, you can definitely triumph and get the passive income you need. But the question is this: how much passive income do you need? Great question. First step, I should say, is goal setting. You need to understand first and foremost how much passive income you need in your portfolio if your goal is, like my goal was, to say goodbye to 9 to 5. So I like to call that your financial freedom goal. You got to set that goal. It's just like working out, right? If you ask an average Joe Blow on the street what they want in life, they may say, oh, I want to be fit, I want to be healthy, I want to be in good shape. Thanks for sharing that, but what does that mean quantifiably? How is that measurable? What does fit, in good shape, being healthy, what does that look like? What metrics are associated with those things? But if you ask someone else on the street who's a bit more clear where their goals are concerned, a bit more specific, and say, hey, what do you want out of life? Hey, I want to be fit, which means I want to have a 32-inch waist. I want to be able to fit in the dress size. Sorry, ladies, if I'm wrong. Size 0. I want to be able to shed 15 pounds by December 31st, 2021. And I want to. That's extremely specific. When you set that goal, even though you may be far from it, you may not have a 32-inch waist. It may be a 48. You may not be able to be a size 0. You might be in a size 12. You know, whatever the case may be, right? Whatever your goals are. And I'm not passing any judgment, right? If you are in those sizes, there's nothing wrong with that. But if your goal is to get to a certain point, you have to make sure it's specific. It has to be measurable. So tie that into the goal setting. So if you say, hey, Juan Pablo, I too want to increase my passive income over 0. Okay, great. Because I too, Juan Pablo, want to become financially free. Great. Because I too, Juan Pablo, want to quit my day job. Great. How much passive income do you need? That's the first step. So the way you answer that is by doing the PILE formula. PILE formula is a term that we coined in our company, 100% Finance, which is an acronym, which stands for your PI, passive income, must exceed your living expenses, LE, by a margin, let's say of 1.5, 150%. So you take your monthly living expenses, let's say they're $5,000 a month, You multiply that times 1.5 in your calculator. So you should do it now to get some practice, right now. You pull your phone out and do it. Multiply your living expenses, let's say 5,000 times 1.5, that's 7,500. So maybe that's a good idea to aim for, right? Which means, that's a good goal to aim for, that you need $7,500 a month in passive income in your portfolio. So now you know how much income you need. So now you know your starting point, which may be zero cash flow or passive income. And I use those terms interchangeably. They're pretty much the same thing. Cash flow is income that is your profit in your pocket after all your bills have been paid for with real estate, right? It accounts for operating expenses, reserves, maintenance, it accounts for property management fees, debt service, your mortgage payment, business credit card payment, all that good stuff. So we use those terms interchangeably, cash flow and passive income, okay? So let's get back into it. So your PI, you want your passive income to exceed your living expenses by 150%. So in order to go from zero passive income or negative passive income to 7,500, you now have your starting point, as I was saying, whether it's zero or negative, to your ending point, which is 7,500. So similar to a road trip. Old school GPSs, you remember back in the days when you wanted to go somewhere, you had to key in your end destination, such as I want to go to New York City, and then you had to key in your starting point. Okay, I'm here in Atlanta, Georgia, here's my specific address. Nowadays, because of satellites, you just have to put in the end destination, not your starting point, because it picks up your location automatically. But let's say you didn't know your current location automatically, right? And most of you may. You know automatically that my passive income is zero. Some of you guys are smart enough. But some of you guys may say, well, I think I'm in a negative because I do use my credit cards to pay my bills. I had an unexpected tax bill, Juan, and I had to pay that. Or I had an unexpected repair on my car, and I didn't have the savings either, so I had to use a credit card to pay that as well. Or I had to take out a loan to get new equipment, a new computer, a new car, right? So you want to make sure that you know your starting point, financially speaking. So once you know your starting point and then your end point, then you can start moving forward towards the next step. So that's step one, your financial freedom goal. Set that goal. Know thy numbers. Okay, the second step towards going from zero to passive income, the 5 steps I took, especially to get started, with little money to little credit, is doing a personal financial analysis, meaning complete a personal financial statement. Why is that important? Because when you start using leverage and buying properties with a mortgage company, they want to see your PFS, your personal financial statement. Your personal financial statement pretty much is several documents, but I'm going to share with you the two major ones that they look at, mortgage lenders look at. Your income statement, which shows your income and expenses, to see your personal cash flow, how much money you got coming in versus going out, and then your balance sheet, meaning your net worth. What are your assets minus your liabilities? If it's positive, you have a positive net worth. If it's negative, meaning you have more debt, more liabilities than you have assets, then it's a negative net worth. Okay, so mortgage lenders want to take a look at that. Why? Because they want to see how savvy you are. They want to see, do you have positive cash flow on a personal level? Because their mindset is this: if this person is faithful with the few, they can be ruled over much. If this person is great at managing their personal finances, because they have a positive net worth, they have a positive cash flow on their income statement, they're more than likely to do the same thing with their business. And plus, they want to see if you have other assets, because mortgage lenders, they like to see what's called global income. They want to see what other areas are you getting income from your W-2, you're getting income from other rental properties, you do some day trading over here, you have another business. Not saying you have to have all those to get qualified for a mortgage, but what I'm sharing with you is they like to see more than one source of income, because it minimizes the risk of you default on a mortgage if that property happens to go south, because you have other sources of income to pay that bill, that mortgage bill. Okay, and they also like to see, outside of your personal financial statement, they want to see your credit score, because your credit score is a numerical representation of your credit worthiness as a borrower. That's it, right? So they want to make sure that you have a good history of repaying your debts, because if you have a bad history of repaying your debts, more than likely that'll carry on to the future if that mortgage company extended a mortgage to you. And you want to definitely do an analysis, not just to qualify for mortgages, but just to see where you're at. Yes, it may be painful. It's like your mom telling you to clean up under that bed, and you know that bed is going to be scary underneath that bed. You know there's going to be chicken bones since last summer. You know there's going to be like some dirt, some grime, there might be some bugs, might be a dead rat under there. You just know that you haven't looked under that bed in ages, and you're scared to see the mess that's there and the amount of work you have to do to clean it up. And some of you may feel the same way about your credit, that you haven't ran a credit report since last summer. And you know there might be some derogatories on there, there might be some collections, there might be some bankruptcies, foreclosures, some late pays, some charge-offs, some evictions. You're terrified to look at that credit report because you know the amount of mess that was there and the amount of work you have to do to clean it up. But guess what? You gotta do it. Because once you see your starting point, see that mess, you can start creating a plan of action to clean it up, okay? So we got the 2 steps so far, and they both relate to personal, right? Set your goals high for your financial freedom goals and do a personal financial analysis. You gotta look at your own numbers because you gotta think of the logic. If you're not able to know your numbers, because you are your most important business, right? You incorporate it. If you don't know your own numbers, how can you successfully know and analyze and make sound business decisions based upon the numbers and metrics and data of a business? If you can't manage your personal cash flow, how can you do that from a property standpoint? Especially if you have investors and you have other creditors that you're indebted to, like mortgage lenders and so forth. Make sense? Excellent, excellent. So my 3rd step, after you get your personal stuff out the way, now it's time to do some other type of analysis. The market. Which market are you going to invest in? If you're like me, you might be in the New York City area, you might be in the A city where the price points of real estate are through the roof, no pun intended, well pun intended, but it's expensive. And it may be difficult for you to invest in that market because of the amount of down payment money you have to bring to the table. So with me, living in the New York, New Jersey area, shout out to Jersey, it was difficult for me to buy additional properties there. I bought my first property there because I only had to put a 3.5% down payment, and buying another property there, putting a 20% down payment was way above my price point. My first property was $355,000. Putting a 20% down payment on another deal like that will be super expensive. So I was pretty much forced to invest in other markets in which they were first priority to me is they're safe. So market selection and analysis is the 3rd step. So let's get into the 4th step. 4th step I have here is once you locate your market, you did the analysis, you know about the return and crime rate, schools and all that good stuff. Next thing is you got to build a team, because if you're investing outside of your area, your market like I did, you want to make sure you have a sound team in place so that they can do all your bidding for you. They can knock on doors, they can do evictions, they can repair the property, they can lease the unit, they can do all those things under the sun while you're many miles away to make sure that you're receiving the cash flow, the passive income that you deserve. Because if you put a lot of money and thought into your personal situation in the market and dropping money on the property, you want to make sure that you reap the rewards of your investment, okay? So that's the next step. You want to definitely make sure that you build a sound team. Screen them thoroughly, okay? Now, the next thing is, after you found a team in the market and you're buying properties, put this on repeat. Continue to do it over and over and over. Continue to buy multi-units because it's the fastest way to financial freedom, to the point that you have several properties, multi-unit properties in your portfolio that you have enough passive income to say goodbye to 9 to 5. So that's a great question in regard to how do you go from 0 to passive income and what were the steps. So those are my 5 steps to buying multi-unit rental properties out of state. As always, guys, it's to your success. You continue to earn passively, live passionately. If you have any requests for topics, place them in the comments below. Peace.